Let's take a look at the Russell. Last podcast on the Russell back in January, I think January 9th. So we're at these levels right here. So let's see what happens after 2 months. January closed all the way back here. February closed right. That's uncanny. 12-month moving average was at 1578 and it closed 1576, just under 12-month moving average. Sellers coming in, pushing it down below it. And this month, same thing. We had price action above the 12-month moving average. Sellers coming in, bring it below. So what is this? Is the pullback complete? I'd love to see a red candle right here. A close below that 12-month moving average. And further away it is, the better. But I want to see, do we have more details? We did not. So here are the highs. We're still now, since we've done those highs, the highs were 1742. Getting this candle. 1, 2, 3, 4, 5, 6 months already. And we're still not back above those highs. Let's zoom in. I want to compare. Okay, let's go on the weekly. Let's see what we have. Stage 3, back above, still declining 30-week moving average. Volume drying up, still underperforming the SPX. So you're missing a lot of those criterias. Remember, you want the 30-week average to start angling upwards, so you get a green zone here. So you're going to need more price action above the 30-week moving average to keep it up. And then after that, a close above that. That means you're stage 2. And then you could anticipate some resistance right here at these levels. Whoa. Go up, hit resistance, come back down, test, and then maybe go up. Hitting that 30-week average, going up, getting good risk-reward entries right here. Previous support, previous resistance turn support. And same thing as you do on the downtrend. This is the setup that I would see if this would continue on the uptrend. So very embryonic. You just got back above 30-week average. It's still declining. All this effort just to bring it back into a stage 3. There's no stage 2 here at all. Not yet. Not on the weekly chart. It could go on smaller time frames. Probably looks better. And that's what we're going to do right now. Okay, daily chart. Remove all drawing tools. Okay, 200-day moving average. We had that death cross right back here in November. Down. Pull back up above the 50-day moving average. And now we're testing that still declining 200-day moving average. The NASDAQ is above. The SPX is above. The Dow Jones are all above their 200-day moving average. The Russell is the poorest of that gang. And remember, he's the one who fell the farthest back in when we started having those breakdowns late last year. So I see the riskier. It's always the riskier stocks that people take their money out and then they put it into the blue chips. So to really have a gauge of a healthy risk-taking stock market environment, you want your riskier index. You want them to be going higher and higher, outperforming the SPX. Just like here, you were outperforming the SPX. That's what you want to see in the bull market. Really, the small caps really leading the way. Then you have the reassurance that people are really they're risk on. They're putting their money inside. But if these smaller, riskier index start failing, like right back here in October, underperforming the SPX, that's a sign people are taking their money out of that. Might give a little extra time for those bigger indexes to stay afloat. But these are warning signs right here. All right. So still under 200-day moving average. Is this going to turn around? Really having a hard time. Went above this high. And what were these highs? Whoa, man. These highs held it, I believe. Whoa, Let me see. The high, where is it? 1598, 1598, 1591. Sorry, the close. 1595 was the close here. And where the highest close is here? 1591, 89, 74, 82, 76. So this held. We had some little spikes above. So 2 out of 3 we took out. This one is still holding right here. So higher lows, and higher lows all the way over here. What else could I dig into? Let's go check out the percentages of stocks. Just like, okay, there's too much stuff here. Volume, bye-bye. Ichimoku Cloud, bye-bye. Okay. Here is a percentage of stocks of the Russel above their 50-day moving average, FI 50. And this is the percentage of Russel stocks above their 200-day moving average, TH. I love those indicators. It's like the reserve, how much fuel you got in the tank. Right here, let's put in my super duper vertical line. When we had extremes, also signaling potential bottom, intermediate bottom. Remember this on the daily chart. Right here, another extreme. I'm looking at the below the 50-day, and this people could say, "Oh, Pat, watch out, danger zone. It's gonna do for pullback." And what'd you know? It did pull back, re-inflate those metrics, and right now that's giving me. We used to have bearish divergence here, but now the price action from this high to this high was, as we went through here, we had bearish divergence when the price action was here. But as the price action, about here, but as the price action went up, no bearish divergence here. We beat that high. No bearish divergence here either. We beat that high. And we have to go all the way back here to the highest, all-time highest, to have some bearish divergence. Lower high, and that's the last one. If that one gets taken out, there's no more bearish divergence on the daily chart, and this will have a lot more momentum. But remember, if the price action is up here, that means that stage 2 is going to look more and more probable. You're going to have multiple days above the 30-week moving average. It's going to start angling upwards. So naturally, when you destroy a bearish technical by having, let's say, the higher price, and you're destroying this bearish divergence, a whole bunch of other are going to be turning on. Bearish technicals are going to be turning off, and a whole bunch of bullish technicals are going to be turning on. And that's how the weight of evidence flips over from higher risk, higher probability of having a bear environment, a downtrend, than having a higher probable bull uptrend. That's how it builds. And right now, here's where we're at. So that's for the 50-day. This is a faster oscillator. It's a faster gas tank that gets consumed rapidly. You really see now it's starting to turn over. But what about the 200-day? The 200-day is a longer term. The bigger boat that has a hard time turning. But when it turns, you really know you have that strong momentum in your back. Just like the fast stock on the monthly chart. It takes time to go over from overbought to oversold territory. Let's check it out. So bearish divergence still on the 200-day moving average. And what's really catching my eye is right now we're stalling at previously defined resistance, support and resistance. Broke down right here. You see those? Broke down, tested it, down, tested it, down. And those were all those attempts of those pullbacks to go back up, but they never made it. They never broke that line. And after that, went all the way down. Really, really oversold. So when you have those two, when you have the monthly and not the monthly, but the 200-day above their 200-day moving average really low, and above their 50-day moving average really low, it smells these really oversold conditions where it could pop back up. So it went up and retested. So right now we're retesting that breakout line on the 200-day moving average. If that goes up above, then I think this longer term fuel tank is going to go into the power zone, and then we could have some time above, just like we had some time above that halfway point to support that uptrend. If that goes through, we could be heading for that. And you see, even if I extend it right here, this is tested over and over. Tuck, tuck, broke down, test, couldn't make it. And during the whole uptrend, it's like the power zone, really the power zone, like the fast talk we're going to do right after. Pretty much well defined. And when you went through, you're really in bear territory. So let's see if this pulls back down. If we consume that bearish divergence with the shorter, the 50-day, stocks above their 50-day moving average. Let's take a look, guys. Even here back in 2000, let's go back. Let's go back to the last crash, 2008. Whoa, Patrick, what are you doing? Oh, right here. So let me get out. Where are my highs? Right here. What? I don't have readings. Hold on, let me load that again. 2% stocks above the moving average. Russel right here. Okay, I don't have it for 2008. Okay, I would have liked to see how that... It stops when in 2014? Ah, all right. Let's look at the fast talk monthly. Are we still in... Oh, fast talk monthly right here. Let's see if we're still in the power zone. Reset chart. Right here, power zone uptrend. Went through the halfway mark. Right here in September, October. And right now we're testing again. Whoa, really close to that monthly line, monthly defined fast talk line. And let's see if this is going to bounce down, if we're going to go back into this lower power zone right here. No divergence on the monthly chart with the fast talk, but the weekly, usually I get a little bit more. Use the weekly for divergence. And what do we have here? Whoa, no. Not really. Almost had some divergence. Didn't climb. Oh, that hit 100. Wow. Yeah, just a little bit of divergence right here. High to high on the fast stock on the weekly. And right now it's really starting to turn over. We've had 1-2 weeks. And right now, let's see if we could go back down here into this lower territory. So the indicators are piling up for short entry. You ideally wait for a close back below the 30-week average, still below a declining 30-week average. And I'm really, this could be the beginning of a turn, but you still got to wait. March is very early. Every time I said that, I thought it was a turnover. The red candle converted to green, and it kept going up and up and up. So be patient and keep an eye on how many bearish technicals turn bullish. But when the bullish ones don't pan out and they return bearish, those are the good opportunities to enter. Let me just see. I just want to check one last thing. No, all right. Back down here. All right, guys. That's it. Russell, really close, leading of the weakest of the U.S. markets. Keep an eye on that for a confirmation on the breakdown, and the other ones might follow soon after. Ciao, guys.